Plan for Audit presents to you How to Prepare for the Audit of the Revenue. PlanForAudit.com is a consulting firm providing services to all companies that need to prepare for an audit. The purpose of this video is to give you tips about the best way to prepare for an upcoming or ongoing audit, whether it's your first year being audited or if you've been audited for years. We'll be talking about the revenue recognition under U.S. GAAP, more specifically under the Accounting Standards Codification number 605. Let's get to it. To prepare for the audit of the revenue, we need to know the rules. What do they say? There are 4 key items. Before we dive into it, keep these 4 items in mind at all times when preparing for an audit of the revenue. That's how auditors will assess it. The first one is persuasive evidence. It is also called PE. What does this mean? For this item, you will need to answer the question, does a contract exist? The second one is the service provided. For this item, you will need to answer the question, how can I prove that I deliver the service or good to the client? Next is the fixed and determinable fees. You will need to answer the question, is the fee captured on the contract and updated in the amendment? Finally, collectibility, where you'll need to answer the question, did you receive the payments for the services or goods provided? Now let's discover each of them in detail. As I said earlier, this first step is made to ensure a contract or agreement exists. Auditors go by the rule, so any contract or agreement with the client is required to be signed prior to the start of any services or delivery of goods. An example of PE can be not only a contract, but also a statement of work or agreement. What are common errors that auditors find when looking into the persuasive evidence portion of the revenue? Not signed agreements with the wrong dates, which could lead to cutoff issue, or even no contracts or agreements at all, just an email instead. If you have no signed contract or agreement for a specific client, you will want to gather all of the relevant information available and the related payments coming from this client. The relevant payments will enable you to prove that the cash was received and therefore the revenue was properly recognized. All right. Let's move to the second item. Has the service been provided or have the goods been delivered? The proof that the product or service have been delivered might be different for each revenue type. For example, if you own a hair salon, do haircuts, and sell shampoo, you have 2 types of revenue, also called a revenue stream. This is the way auditors will look at it. And for each revenue type, you will have to provide specific documentation proving that the product or service was delivered. This will be a document proper to each type of revenue that is specific to each company. For the delivery of goods, the documentation should be straightforward. It could include, for example, a bill of delivery. For the delivery of a service, it could get more complex, as the date of service is not always written on the invoice. Therefore, you will have to understand the way it is tracked in order to identify the most relevant document. What are the errors that auditors usually find? Well, usually auditors struggle to get the relevant support related to service delivery. This is why support might be different depending on the industry, but to find the best way to get there, just think about who in your company is tracking it. What do you obtain before the service happens, during the service, and after the service? For example, are there any time tracking systems? Also, keep in mind that the finance department of a company looks at the business while auditors strictly look at the rules. Therefore, there might be differences between what document the auditor thinks could be provided versus what can actually be provided. The fixed fee portion should be pretty straightforward. However, you'd be surprised with the number of times auditors stumble upon non-updated fees or support that doesn't contain such information. For example, the fixed fee, rate and hours billed, can sometimes be found on contracts, statements of work, or invoices. However, in the case your fees went up, it is important to have a signed amendment to your existing contracts to support the new fee. Not having such evidence could result in a revenue adjustment. What are the errors that auditors usually find? Non-updated fees on the PE or amendments not signed. To avoid that, make sure you go through the biggest contracts and agreements, keeping in mind that auditors work with a threshold, and ensure the latest rates are updated in the amendments. The collectability should also be pretty straightforward. However, it does require that you gather payment information and know the procedure when the company gains a new client that is not necessarily financially mature. For example, your new client is a startup. What do you do to ensure you'll get paid? Are there any monitoring processes? The auditor will write or update a memo explaining these processes. Therefore, it is important for you to know them. The auditor will ultimately have to consider if there could be a collectability issue or if your company could be facing in the future any lack of treasury. What are the typical findings? As I mentioned earlier, in case a contract or agreement doesn't exist, the auditor will want to go to the payment to ensure the cash was properly collected. This will guarantee that the revenue was properly recognized. Therefore, ensure you have the proof of payment ready to go if you identify any of these cases. If all your contracts and agreements are signed, you might not need to show proof of payments related to certain clients. However, the auditor will review your collectability anyway through bad debt. To summarize, let's be clear. You are busy enough with your work, and adding additional red tape to normal operations is not necessarily your priority. However, keep in mind that any instances that fail to meet these 4 criteria might result in recognizing less revenue than what was recorded. Therefore, it's important to ensure you prepare for these elements accordingly. To be best prepared, follow these 2 steps. First, know the process. Second, gather the necessary documents that meet the 4 revenue criteria. For the contract, PE piece, know that the most important contracts will be reviewed. For the service provided, perform a critical review of the revenue to identify the different revenue types and prepare one example of service delivery for each type. You'll later present those to the auditor. For the fixed fee, again, perform a critical review of important contracts. Identify where the rate is indicated and if the rate is updated. For the collectability, you will have to explain the process performed to ensure payments from new clients. Make sure you know it and gather payments from your main customers as those will be requested. At the end of the day, if you prepare for the audit of the revenue accordingly, just keep in mind that the auditor will look for, first, a detailed understanding of the revenue streams, revenue type, as mentioned earlier, reported on the trial balance. Don't forget that auditors perform audits of financial statements. Therefore, in case the scope of audit includes multiple business units consolidated in one trial balance, the auditor will look at the financial statements level and determine from there the different revenue streams. Also, remember that if your company provided multiple services or products under one price, like a Happy Meal at McDonald's, which includes a burger, fries, and a drink for one single price, this will be considered as a multiple element arrangement. In this case, you will have to provide the auditor with a fair value assessment for each service or product included in the single price. Please refer to the Accounting Standards Codification number 605-25 for more details. Next, specifics of the business. What does the company do that others don't? The auditor will take a particular attention to anything specific to your company. Key systems and applications. Depending on the systems your company uses, for example, Salesforce, auditors might need to reach out to the software provider to get additional comfort over the systems and applications used. Next, revenue recognition policy. In case your company has a revenue recognition policy, make sure you know it and have it ready in case the auditors ask for it. Lastly, keep in mind that auditors will not necessarily have an operational vision. They are here to ensure that you are respecting the rules. Whether it's your first year being audited or if you've been audited for many years, you have to demonstrate any relevant processes. Also, keep in mind that auditors look at things with a certain level of materiality and are less likely to pick up smaller contracts. Please refer to the Accounting Standards Codification number 605 for more detail on the revenue recognition and more specifically to the ASC 605-25 for multiple element arrangements. For more information, tips, and if you need help preparing all of the necessary documentation for an upcoming or ongoing audit, visit us at plan4audit.com. Our proven high-quality service and qualifications will help you get through the audit seamlessly. For any further questions and requests, visit us at plan4audit.com. Thank you.